Hi everybody, today let's talk about 3M, one of the world's foremost industrial conglomerates. While researching 3M's decades-long history of paying and growing its dividend, I couldn't find any time its stock had a 5% yield. I mean, although 3M is a dividend king that's raised its annual payout to shareholders for 64 consecutive years, only rarely in the last half-century has the stock yielded even 4%. Near the end of the 2009 Great Recession, during the depths of the 2020 COVID crash, and right now. That's right. Due mostly to a plunging stock price, 3M's yield has taken a stroll past the 4% mark. For that reason, and a few others I'll get to in a minute, 3M has become an interesting candidate for investment again. Hi guys, Mike Nadell here for the Dividend Income channel. Before I talk more about this industrial giant, please do us a favor to help us grow our channel. Hit the thumbs up at the bottom of the video, subscribe to our channel, and ring the bell so you get notifications of new videos as we publish them. Okay, now let's talk about 3M's history, its business model, why we recently added to the 3M position in our income builder portfolio, and how it might appeal to long-term dividend growth investors. In 1902, 5 businessmen founded Minnesota Mining and Manufacturing Company in Two Harbors, Minnesota, to mine minerals for sandpaper. In 1905, founders Danley Budd, Henry Bryan, William McGonigal, John Dwan, and Herman Cable received an influx of cash from St. Paul businessman Lucius Ordway, and the company moved to Duluth, Minnesota. In 1910, 3M moved to St. Paul, accelerating the company's expansion. In 1914, the 3Mite abrasive cloth became the company's first exclusive product. In the 1920s, lab assistant Richard Drew came up with the idea that led to masking tape, which was especially useful back then in doing work on cars. With that tape, the Scotch brand was born. And in the 1930s, it led to cellophane tape, which remains one of 3M's leading consumer products to this day. In 1946, 3M began trading on the New York Stock Exchange under the symbol MMM. In 1961, 3M introduced Scotch Magic Tape, which is virtually invisible when applied to light-colored paper and envelopes. It remains one of the company's most popular consumer products. The following year, 3M moved its headquarters to suburban Maplewood, Minnesota, and it's still there today. In 1969, 3M products were used by NASA, including Florel elastomer, a synthetic rubber used in the astronauts' boots. In 1979, the company introduced Thinsulate thermal insulation, which made coats, gloves, shoes, and other clothing warmer and drier for its users. 3M research chemist Spencer Silver was trying to create an adhesive so strong it could be used in aircraft construction. He wasn't able to do that, but he ended up inventing an adhesive that stuck to surfaces but that could easily be peeled off and reused. After several years of experimentation, stops and starts, Post-it notes were born in 1980. Today, they're in just about every office, everywhere. In 1994, NextCare bandages made their debut and became a popular alternative to Johnson & Johnson's Band-Aid thanks to their water-resistant adhesive. The company had been called 3M for decades, but in 2002, it celebrated its centennial anniversary by formally changing its name. In 2014, 3M reached an innovative milestone with the issuance of its 100,000th patent. Today, 3M is an industry leader and one of the 30 companies that make up the Dow Jones Industrial Average. I've already talked about some of the iconic consumer products like Post-it notes and Scotch tape, but 3M is involved in so many businesses that I thought it best to describe its 4 segments. The safety and industrial segment consists of abrasives, closure and masking systems, electrical markets, industrial adhesives and tapes, personal safety, and roofing granules. The transportation and electronics segment consists of automotive and aerospace, and electronic materials solutions. The healthcare segment's products and services include drug delivery, food safety, health information systems, medical solutions, oral care solutions, and separation and purification sciences. The consumer segment consists of consumer healthcare, home care, home improvement, and stationery and office supplies. Now let's talk about what's been going on with the company lately. For decades, 3M's success made investors want to own the stock, and it crushed the S&P 500 in the years after the Great Recession. During its investor presentation on January 26, 2018, the company announced it had astounding earnings and revenue growth. It significantly raised guidance for the upcoming year, and it announced a 16% dividend raise. It was then that I first chose 3M for the income builder portfolio. Unfortunately, since then, it's been tough going, with a total return of minus 35%. Despite the bull market most stocks were enjoying. There have been expensive lawsuits against the company concerning PFAS, a chemical that allegedly damaged water supplies in numerous communities. There have been questionable management decisions and misstated guidance. There's America's ongoing trade war with China, and now the COVID-19 pandemic. And on January 25th of this year, the company had a solid earnings report, and the stock ticked higher. But 2 days later, a federal jury awarded $110 million to 2 U.S. Army veterans who said their hearing was damaged by 3M's combat earplugs. It was the largest verdict yet involving the earplugs, and there are hundreds of thousands of lawsuits outstanding. Predictably, investors reacted with another round of stock selling. By now you might be asking, okay, so why should I buy this stock? That's a good question, and I'll try to give you a good answer. At this point, 3M represents both a value play and a turnaround story. For example, Argus analyst John Eads said, "We think the company is back on track to achieve its long-term goals of raising margins and growing earnings. Over time, we expect it to generate high single-digit EPS growth, driven by 3 to 4% revenue growth, margin improvement, and share buybacks. The company's balance sheet is solid." And Morningstar analyst Joshua Aguilar says, "Recently the firm reorganized its segments from 5 to 4 to better align with the firm's customers and its go-to-market strategy. Its international employees now report directly to the firm's segments. In our view, this eliminates another layer of management and gives 3Mers greater autonomy, while also allowing for a greater focus on its customers." Despite some of 3M's recent struggles, we're still talking about a high-quality business here. 3M gets a wide moat rating from Morningstar, an A+ credit rating from Standard & Poor's, Value Line's highest grades for financial strength and relative safety, and a solid 75 dividend safety score from Simply Safe Dividends. Okay, now let's talk about that dividend. One of the many appealing things about the dividend growth investing strategy is that dividends can help set a floor for a stock's price. If an industry leader like 3M gets cheap enough, income-hungry investors tend to pile in and move the stock price back up. That helps explain why investors haven't let 3M's yield hit 5%, despite all the wars, recessions, pandemics, management missteps, lawsuits, and other negative events over the decades. Since 3M raised its dividend 16% back in 2018, the increases have been quite small: 5.9% in 2019, 2.1% in 2020, and 0.7% in 2021. On February 8th, the company announced its increase for 2022, and it's another 0.7% raise. Obviously, I wish the dividend of every stock we own would grow by double digits every year, but 3M is dealing with plenty of issues these days. I'm glad the company isn't overextending itself, and that its free cash flow can still easily cover its dividend. With raises big, small, and everywhere in between, 3M is one of the longest dividend-growing streaks in the investing universe, dating all the way back to Dwight Eisenhower was in the White House, and has paid dividends for more than 100 years without interruption. So if a dividend investor believes in 3M's turnaround story, the current yield is a pretty unique opportunity. Now let's talk about valuation, or how buyable 3M stock is. Analysts tend to be momentum-driven, so by and large they aren't excited about 3M. 5 of the 20 monitored by Reuters have given the stock an underperform or strong sell rating, compared to only 4 going with buy or outperform. Despite the negativity, analysts actually think the price has a lot of room for upward movement. 19 analysts monitored by Refinitiv have an average target price of $174, representing 18% upside. Those analysts have undoubtedly been influenced by the stock's very low multiples. Its 14.6 trailing PE ratio, 14.2 forward PE ratio, and 2.0 PEG ratio are much lower than the 5-year averages. Morningstar says the stock is trading at a 23% discount. Value Line's 18-month target price indicates 25% upside. Value Line also says there could be as much as 80% price appreciation over the next 3 to 5 years. With a price target of 190, Argus is all about 3M being a value opportunity and a turnaround story with earnings that are poised to grow again. Finally, FastGraph shows a stock that appears to be quite undervalued. The red circled areas indicate that 3M's blended PE ratio of 14.5 is considerably lower than its 5-year norm of 20, and the purple circle shows how the end of the black price line has dipped well below the blue normal valuation line. So if an investor decides that he or she likes 3M, it's been a while since the valuation has been this enticing. Put all that together, and I thought it was a pretty good time to add to the Income Builder portfolio's 3M position. On February 22nd, we bought 5 more shares of the stock, and we now have 16 shares in the portfolio. I wouldn't have selected 3M again for the IBP if I didn't think the turnaround story was legit, but obviously we can't know yet if things will improve and how quickly it'll happen. It's certainly understandable that folks have a healthy skepticism toward a company that's underperformed in recent years. As always, I encourage investors to conduct their own thorough due diligence before buying 3M or any stock. For more information about the Income Builder portfolio, check out the link in the description. Once on our Dividends and Income website, become a subscriber and you'll be notified whenever I write an article about my buys and sells. Alright guys, that's all for today. Again, please give us a thumbs up, subscribe, and ring that notification bell so you don't miss out on any of our content. Take it easy everybody. Back at you soon.